Okay, we want to talk about the flow of costs through a manufacturing firm. For those of you who have the Warren book version or edition 25, it's on page 847. For those of you in edition 12, it's on 767. What we're going to be doing today, we're going to follow this example for the Legend guitars costs as they flow through the factory. The thing to start with, I guess, is to say that things we used to consider materials, the things we used to consider expenses, are really in a manufacturing firm are just our inventory, their assets until they actually are sold. The definition of an expense is the using up of an asset to generate revenues, and so just the changing of the form of one asset to another asset is not the generation of revenue. It's the using up of an asset. So swapping cash, one asset, for materials, another asset, doesn't generate revenue. Taking materials and putting them on the plant floor to produce guitars doesn't produce revenue. It just swaps an asset called raw materials for another asset called work in process. Paying for lights and insurance, paying for labor, supplies and other things, and putting that and applying those, using those to create your product. In this case, guitars, is not generating revenue. Is adding a value to an asset. Now, when the work in process asset is completed and you transfer it to finished goods, it's still an asset. It's swapping one asset for another. And finally, when you take the finished goods and you sell it, you put it on a truck and send it to the purchaser, that is generating revenue. That is the using up of an asset is not an asset anymore. You have gotten rid of it. Somebody else owns it, and they've paid you money for it, and that is generating revenue. So we start with materials. Materials is one of the three cost components in a manufacturing firm. The other two are direct labor and factory overhead. Now you can look at them as prime costs, which are direct labor and direct materials, or conversion costs, which are factory overhead and direct labor. But they're all composed of the three basics: materials, labor, and overhead. Direct materials, direct labor, and factory overhead. So Legend Guitars has $65,000 in beginning inventory in their raw materials account. Throughout the year, they purchase $100,000 more worth of raw materials, which gives us a total of raw materials that could possibly be used in production of $165,000. This idea of the amount of materials, or the amount of work in process, or the amount of finished goods, the total amount that could be used or could be completed or could be sold, is important. So the cost of materials available for use is $165,000. We don't know how many we used until we take the final inventory, which was $35,000, which means that we must have used $130,000 worth of materials in the production process. This is the cost of materials used in production. This is the number that gets transferred to work in process. The direct materials used in production come straight from this number here, and we add to it the other two cost components: the direct labor that is used during the period, in this case during the year, and the factory overhead that is applied during the year. Now, the factory overhead account increases with debits as we purchase utilities, we purchase insurance, we record depreciation, we do all those things. We actually transfers, in most cases, we transfer some materials from the raw materials account to the factory overhead account, and then apply that by crediting factory overhead and debiting work in process. But these three numbers here make up the total manufacturing costs incurred during this period. $284,000 in manufacturing costs that were incurred during this period. Now it's important to separate that out from another account or another concept called total manufacturing costs. But this is total manufacturing costs incurred during the period. Besides these three costs, there is also another cost that we have on the books, the work in process inventory at the beginning of the period. We had $30,000 of unfinished guitars sitting on the plant floor at the beginning of the period. We added to it the total manufacturing cost incurred this period, and that ended up being making up the total manufacturing cost we have on the books at the moment. We have $314,000 worth of total manufacturing costs, $284,000 of which were incurred this period, and $30,000 of which we incurred in a prior period, but were still in inventory as we started this period. So we have $314,000 total manufacturing costs. This is the total manufacturing cost that could have been transferred to finished goods at the end of the period. Whether they were or not, we'll find out. What you do is you take, just like up here, you take the ending inventory of work in process, subtract that from the total manufacturing costs, and that gives you the cost of goods manufactured during the period. In this case, $290,000. The cost of goods manufactured is the cost of goods completed during the period. These goods, these finished goods here, are transferred, of course, to the finished goods account. We start with the finished goods inventory at the beginning of the year. We add to it the cost of goods manufactured during the year, and that gives us this concept again of total goods available. This is the total finished goods available for sale, $350,000. If we had sold all our guitars and didn't have any on hand at the end of the year, we would have sold $350,000 worth of guitars. To find out how many we actually sold, we subtract our ending inventory, finished goods, and we come up with cost of goods sold of $287,500. So that's how costs flow through a factory, a manufacturing firm, in every case. There's a few differences that you might, little nuances you might come up with a little bit. For example, the idea that some of the materials don't necessarily go straight to work in process. Some of them will go to factory overhead first and then get applied to work in process. But these are the steps that are going to occur throughout the next several chapters as we study them. It would be a really good idea for you guys to turn to the back of the book, back of the chapter, I mean, and do some of the extra problems. I assigned to you 18.4a, or in some of your cases 16.4a, as a good example. This type of problem crops up continually, and is one of the things we have to work with to learn to figure out what variables we have and what facts we have. We take the facts, the numbers at our disposal to compute the variables. Sometimes the variable is the beginning inventory, sometimes it's the ending inventory, sometimes the beginning we know those, and we need to find the variable that's the materials purchased or something else. So all these things you need to be able to compute. Anyway, good luck.